Welcome back to episode 6 of the $100 to $10,000 series. Before we get started, I want to share with you guys a very interesting video I found a few weeks ago. It's an interview with a guy that has lots of money to burn and he started day trading. Let's hear about his experience.
Wall Street are bringing a new flood of new traders into the market. Case in point, Charles Schwab reporting a record number of new brokerage accounts opening. But if you don't know what you're doing, you could get burned big time. Many of you know our next guest, and he has his own cautionary tale to tell. David Portnoy is founder of Barstool Sports. About a few weeks ago, he decided to take a crack at day trading. He put $3 million into an E-Trade account, and he's currently down about $600,000. Dave, welcome.
How are you?
I feel like we should play the sad trombone when I say that. Had you ever traded a stock before this?
I think I was a Twitter guy. So my first foray, I think I bought Twitter around 50 and then sold it around 18 and then watched it climb back up to 40. So I was 0 for 1 going into it.
Okay, so this guy bought Twitter because he hopefully liked the company and its future prospects, but he bought it when it was hitting all-time highs at around $50. So in hindsight, we know that he didn't buy it at a bargain price, but when it fell to 18, he sold all of it, which is the worst thing you can do as an investor, that even people who don't invest knows not to do, buying high and selling low. He was confident in his investment because he saw that Twitter has been going up and he expected it to continue doing that. But when it didn't and the price went down, he sold it all because he is just following the herd. What he should have done if he was confident that Twitter is a solid company worth investing in was buy more shares at $18 instead of the $50 that he started buying at. The mentality you should have as an investor when your investment falls in price is not, oh shoot, my company must not be a good company because everyone else is saying so. But instead, you should have the mindset of, I know this company was worth $50 just a few weeks ago before it fell, so I'm going to buy more shares since it's selling at a discount right now. Alright, let's keep watching.
What's your what's in your portfolio right now, and how do you choose the stocks to go in there?
Yeah, so I'm flat right now. Today I was trading Shopify and Amazon all day. But basically, I look for stocks because I put a lot of money into it. I look for stocks that have high volatility and that a lot of volume because I don't want to be like shaping the market. So I look for big stocks that a lot of people are trading a lot of.
So you mentioned 2 stocks today that you're in. Are you trading, millions of dollars worth at a time?
Oh, yeah. I mean, so I'm learning a lot as I go. I will say I was down 1.2 million, so I'm hot right now. But with this margin thing, which I had no idea about, I'll have like $12 million in play most of the time.
Oh, so you're leveraging your $3 million into much more.
Oh, yeah.
Oh.
Yes.
So for those of you unfamiliar, many brokerage firms allow you to borrow money from them to buy an investment, in this case stocks. So he has $3 million deposited in his brokerage account, and with that money, he borrowed an extra $9 million to day trade. To me, this is insane because as mentioned in my investing in a time of uncertainty video, which I will leave a link in the description below, no one, not even the best investors like Warren Buffett, can predict the future. And the risks of losing money on your investments are even higher if you buy and sell stocks on a daily basis. And what happens if you fail at day trading? You now have to pay back the money that you borrowed and pay back the interest. So it's a pretty irresponsible way to handle your money, in my opinion.
Wow, a guy who likes to take a challenge. All right, Davey Day Trader is the name that you have given yourself, and we do want to help you. I mean, this is called Fast Money. So we'll try and help you. We've got some questions that you can pose to our traders. So let's start. Class is in session, right, for trade school right now. And we got to start with Boeing here. Dave, apparently you got burned in this one. So
yeah, I hate Boeing. If I saw Boeing, I'd punch it in the face. Boeing has accounted for almost all of my losses. So I learned how to short. Like, I didn't really know you could do that. I think I shorted Boeing around 140. It went up to 170, 180. Forced me out. When I sold it, it fell all the way right back down to 140. I can't figure out day to day if anything has to do with why Boeing has such tumultuous rises and falls. Like, I know it's in the news, I read it, but I can't tie it to why it has these wild swings.
I think this is a
Okay, he says it himself here. He doesn't know why the value of the stock fluctuates so much. No one does. And because no one can predict what hundreds of millions of people that are invested in the stock market will do today or tomorrow, it's silly to try to day trade without some kind of supernatural power or knowledge that you have. But over the long term, if the company that you invest in continues to grow and do well, the price of the stock will reflect that. Let me know in the comments below what you guys think of Davey Day Trader's investing style and whether you agree or disagree with my thoughts. Moving on to the news items of the week. This Friday, we had a really big headline making the front pages. The US unemployment rate fell to 13.3%, when unemployment rates were expected to rise above any rate seen post-World War II. 2.5 million jobs were added, with restaurants and bars being the biggest part, with 1.37 million jobs created as businesses continue to reopen throughout the states. And with the progressively good news this week, stocks neared their all-time highs, with our holdings going up almost 5% this week and 15% overall. But there will still need to be another 19 million jobs that needs to be given back to people to return to the February lows. And some analysts have voiced concern and confusion because these unemployment numbers don't make sense to them. Let's take a listen on one analyst's concerns.
Joining us now to discuss the employment report is Mohamed El-Erian. He is Allianz Chief Economic Advisor. And Mohamed, see you.
Thanks for having me.
So you wrote this morning, or you tweeted, quote, in sum, a head scratcher that needs analysis. Why are you scratching your head on this jobs report?
I'm still scratching my head. I don't think I'm the only one, because it is inconsistent with every other data point we've had as of mid-May. And it's important to remember that this captures the situation as of mid-May. It is also inconsistent with everybody's expectation. No one was looking for an uptick in jobs. Now, it may be that the economy has picked up in a major way. That's the hope, and that's certainly what the market has embraced. It may be two other things: that government policies were very effective in reducing those who were officially unemployed, or it may be that the data is very, very noisy. So we won't know, and unfortunately, we won't know till the next month.
So it seems that we will have to keep an eye out on the jobs report next month to see if this trend is a sustainable trend that will continue, or if it's a one-time thing. And European markets have gotten some good news this week as well, with the European Central Bank, or ECB for short, announced a 1.35 trillion euros, or $1.5 trillion worth of a stimulus program called the Pandemic Emergency Purchase Program. This is almost a doubling of its program compared to March, when it announced a budget of 750 billion euros that will last until the end of 2020. Moving on to the next topic, Warner Music, a record label that has artists like Bruno Mars, Ed Sheeran, Cardi B, and many others, is going to IPO 77 million of its shares to the public for $25 per share. That values the company at $1.9 billion. And last year, it reported revenues of $4 billion and $312 million of net income. Those figures were down from 2 years ago in 2018, when it reportedly made $4.5 billion in revenues and $258 million in net income. So we don't have a lot of information about the company's financials yet, but just from those figures, we know that the company did not make as much money in 2019 as in 2018. But its profit margin did rise from almost 6% to about a 8% profit in 2019. Now, Warner Music has two other large competitors, Universal Music Group and Sony Music Entertainment. The music industry has been overall doing very well in the past several years. In the early 2000s, many people believed it was the end of the music industry after peer-to-peer file digital sharing destroyed sales of recorded music by as much as 40%. But with growing popularity of subscription-based services like Spotify, the music industry has made a large comeback. Personally, I won't be investing in Warner Music at the moment because oftentimes Companies that just IPO'd have very wild fluctuations in prices, and not as much information is known about the company yet. That's gonna be it for this week. Stay safe, and I'll see you guys in the next one.